Good morning or good afternoon, everyone. It's Ankit. Whenever or wherever you're watching this video, thank you for taking the time out of your busy schedule to watch today's video. I hope everyone's having the best day or the best week of their life. If you found value and are excited about today's video, make sure to hit the subscribe button for more videos like this. Today I just want to make a quick video on 7 safe high dividend yield stocks that you can buy and add to your portfolio. Keep in mind, none of this is financial advice. This is just a few stocks that pay nice dividends, I consider safe, and that could be amazing to add to your portfolio. Leave a comment below with what your favorite high yield dividend stock that is safe. Let me know in the comments below and why you think it's safe. Let's try to hit 3,000 subscribers in 3 months. With all that out of the way, let's get into today's video and talk about these dividend stocks that you can add to your portfolio to make sure you get paid. The first stock we're going to talk about is Global Partners. With gas prices going up in a big way over the last year, it's a smart move to look at for unique ways to invest into the energy stocks. One great way is Global Partners, which is a master limited partnership that is a wholesaler and a retailer of gasoline. The increase in gasoline prices meant big earnings next year that may need to be repeated, analysts say, and are expected 2023 earnings per share to drop from $3.45 to $2.70. But I'm not really worried about it because the huge 8.7 dividends that Global Partners offers. The stock is up 18%. It is currently trading at $27.10. It trades under the ticker GLP, as you already know. The dividends is 8.93%. The PE ratio is 11.92. The market cap for is $921 million. In the 1-year chart, it is up 23%. The 5-year chart, 56%. And if you zoom out all the way, the max chart, 14%. Let's look at their financials. And as you can see, they're beating earnings and their financials look really good. And the second stock we have is OGE Energy, trading under ticker OGE. So electric utility company, does double duty. It's an electrical utility serving within Oklahoma and Arkansas. It also has a natural gas midstream business. That makes it an interesting, safe energy stock. And the dividend's pretty great too. Rising by an average of 6% or more over the last 5 years to the current standing at 4%. OGE recently announced a dividend increase of 15% to 23 cents per share to be paid on August 19th. To shareholders of records of August 8th, which is today, or which is tomorrow, Monday. OGE stocks up 12% since mid-June and shows a 3% gain in 2022. For the first quarter, OGE's posted revenues of $589 million and an EPS of 22 cents per share, which is less than analysts' expectations of $921 million in revenue. The EPS of 38 cents per share. OGE Energy Corporation is trading under ticker OGE, just like we just said earlier. Pays a dividend of 4.07%. PE ratio is 8.37. Market cap's 8.06. Over the year, it's up 14%. Over the 5 years, it's up 13%. Over the max, 921%. When you look at their financials, they did beat earnings by a good amount last quarter, but before those 2 quarters, they did miss earnings. Net change in cash, 0%, which is kind of weird. Sisecam Resources, trading under ticker SIRE, is a soda ash producer in aluminum manufacturing business and the lithium battery business. Of course, lithium is hot right now, commodity, with all the EV car companies. Demand for electric vehicles is growing, and that will continue to be growing for the foreseeable future. As far as aluminum side, soda ash is used to smelt metals for all sorts of aluminum products. Earnings in the second quarter included revenue of $189 million, which is 56% increase from a year ago. Net income is $31.2 million, was an increase of $24.4 million from a year ago, with the stock price up 25% so far in the 2022, a dividend yield of 9.7%. And it is currently trading right now at $23.04. As you can see, the earnings for June 2022, they beat all the earnings. Then we have San Juan Basin Royalty Trust, SJT. It isn't on everyone's radar right now. Maybe that's why, I like it and I prefer it. Or maybe it's because it's a solid payout record. San Juan Basin Royalty Trust owns royalties interests in oil and gas properties in San Juan Basin of New Mexico. It pays out royalties in the form of distributions, which can be really attractive when oil prices are high, and they have been recently. SJT stock is up 107% so far this year. It pays a dividend of 9.4. Earnings per the first quarter included revenue of $14.89 million, up 81.3% from a year ago, a profit margin of 96.5%. So currently it's trading at $12.23. It does yield a dividends of 9.74%, as we said earlier. The PE ratio is 13.38. The market cap for it is $570 million. Let's look at the 1-year chart. It's up 138%. The 5-year chart, 69%. And all-time, 68.69. And when you look at their financials, the operating income's up, net profit margin's up, net income's up, and revenue's up. Then we have CVR Partners, UAN. It's another master limited partnership, but this one is fertilized business. As the price of fertilizer spiked up this year following Russia invasion of Ukraine, UAN stock has the beneficiary. At this point, UAN stock was more than $177 per share, showed gains over the 110%, but even with the recent pullback, CVR partnership is still showing a gain of over 32%. And the war in Ukraine shows no signs of letting up. CVR partnership is scheduled to announce a Q2 earning on August 2nd, which already passed, currently paying a dividend of 11.1%. CVR currently trades at $122.17. As Google is stating that the dividends right now is 17.13%. The PE ratio is 4.22. The market cap for is $1.29 billion. When you look at the 1-year chart, it's up 285%. For the 5-year chart, it's up 285%. The max chart, it's down 30%. The 1-year chart, it's up 136%. Let's look at their financials. As you can see, there was no earnings reported right here. Net change in cash is up 294%. Operating income's up 310%. Net profit margin is up 846%. Sabine Royalty Trust, Dallas-based SBR, has mineral and royalty rights in the U.S. oil and gas properties. Unlike some other names that we went over, SBR pays out monthly dividends rather than quarterly. The yield is currently 8.4%. The dividends is growing. SBR announced in April that it is raising its monthly dividend payment by 56.3% to 73 cents per share, but a recent dip in energy prices means that the company payout has also dropped. Cash distributions in July fell 23.56% from June to 54.49 cents. A year ago, a payout was 71.19 cents. SBR stock is still up 68% so far this year. The dividend growth eases the short-term pain with the drop in payout. SBR is currently trading at 66.82. It does pay a dividend of 8.90%. PE ratio is 13.55. Market cap is 974 million. When you look at the 1-year chart, it's up 71.33%. The 5-year chart 74, and the max 404%. When you look at their financials, operating income's up, net profit margin's up, net income and revenue is up. Devon Energy, DVN, based in Oklahoma, is an independent oil and natural gas exploration production company. The stock is up 42% so far this year, thanks to a raising energy prices. That's even after a drop of 18% since mid-June. Earnings in second quarters are expected to be announced August 2nd, when analysts expected revenue of $4.76 billion. Earnings per share, 2.37. Dividend Energy Corporation, DVN, currently trading at 56.65, pays a nice dividends of 9.09. The PE ratio is 7.18. The market cap for it is $37.09 billion. Let's look at their financials. As you can see, they beat all their earnings. Net change in cash is really great, 345% up. Operating income's up. Net profit margin is up. Diluted EPS is up. Net income's up. Revenue's up. Cost of revenue is up. Let's look at the 1-year chart. It's up 112%. The 5-year chart, 79.22%. And the max chart, it's up 1,826%.